Imagine you've been shopping at the same grocery store your entire life. You know the aisles, you know the prices, then overnight, everything costs 25% more. What do? You start looking for a new store. That's exactly where Canada is right now. The US has been Canada's go-to trade partner for decades, but new tariffs are making that relationship more expensive and unpredictable. Meanwhile, ASEAN is offering lower trade barriers and huge market potential. Just look at the numbers. Vietnam alone saw over $8 billion in trade with Canada last year. Canada recently invested $47 million into ASEAN projects, and ASEAN's total economy is projected to hit $4 trillion. Think of trade like a supply chain highway. Canada's trade route to the US used to be wide open, fast, direct, and efficient. Now, it's getting pricier, slower, and full of detours. Meanwhile, ASEAN's trade lanes are wide open, more routes, fewer obstacles, and direct access to booming industries. So the real question is, how long before Canada shifts more of its trade onto that highway? If Canada's trade strategy were a game of chess, this is the moment it stops playing defense and starts making aggressive moves. ASEAN isn't just another market. It's the fastest-growing trade bloc in the world. Vietnam, Thailand, and Malaysia are producing tech, steel, and consumer goods at record levels. Indonesia is an energy powerhouse, and Canada has just invested $47 million into new projects there: green energy, mining, EVs. ASEAN nations are looking for suppliers, and Canada wants a seat at the table. For Canada, this isn't just a new trade relationship. It's an opportunity to lead. Imagine a business that's been a supplier to one big company for years. Then, that company starts raising costs and adding restrictions. What does a smart business do? It finds new customers before it's forced to. That's exactly what Canada is doing. The question now isn't whether Canada can trade with ASEAN, it's how quickly these deals can scale up before Washington even realizes what's happening. The US isn't saying much about Canada's ASEAN shift, not yet. But silence doesn't mean indifference, it means calculation. Washington is watching closely. Canada and the US trade over $800 billion a year, and 75% of Canada's exports still go to the US. That's not just trade, that's dependency. If even 10% of that shifts to ASEAN, that's a multi-billion-dollar redirection, no small issue. And here's where things get complicated. Washington doesn't like uncertainty in trade, and Canada's move toward ASEAN introduces a new variable. More trade flexibility for Canada means less control for the US. So far, Washington's response has been to raise tariffs, tighten trade policies, and make it harder for Canadian exports to stay competitive. So what's Canada's next move? Does it negotiate harder with Washington to protect its US trade ties? Or does it fully embrace ASEAN as a way to reduce dependency altogether? That decision could permanently shift the balance of power in North American trade. But if Canada thinks it's making a clean break toward ASEAN, there's one big challenge. It's walking into a room where China already owns half the seats at the table. ASEAN isn't just a fast-growing trade bloc. It's also deeply connected to China's economy. Here's what we know. China is already ASEAN's largest trading partner, moving $975 billion in trade annually. Many of ASEAN's biggest industries, manufacturing, energy, infrastructure, are tied into China's supply chains. And now, Canada is stepping into that same space. This isn't about choosing sides, it's trade, not diplomacy. But here's the reality. When you build supply chains, you build relationships. If Canada's exports, how long before supply chains start intersecting with China's? Washington is watching closely. The US has spent years trying to curb China's trade dominance. If Canada's move toward ASEAN indirectly strengthens China's grip, Ottawa finds itself in a tough position. Canada isn't just navigating new trade deals, it's balancing between two superpowers with conflicting interests. How long before this shift forces a bigger political decision? Let's zoom in, because this isn't just about government strategies. This shift has real consequences for Canadian businesses, and not all of them are benefiting. Manufacturers relying on US buyers are feeling the pressure. Tariffs are eating into profit margins. Exporters shifting toward ASEAN are seeing both opportunities and challenges, struggling with a completely different regulatory environment. Supply chains are being restructured in real time, leading to delays and rising costs. Now, picture running a business where 80% of your buyers are in the US suddenly. The cost of getting your product across the border skyrockets overnight. Do you absorb the cost? Or do you scramble to find new buyers in ASEAN, where competition is already fierce? Not every industry can pivot quickly. Tech companies are more adaptable. Energy and mining rely on long-term deals that take years to finalize. Agriculture operates on thin margins, making sudden changes nearly impossible. While Canada shifts on a macro level, businesses on the ground are facing uncertainty, risk, and a race against time. The big question: how many businesses can successfully transition, and how many will be squeezed out? Canada may see ASEAN as a golden opportunity, but what about the other side of the table? If you think these countries are rolling out the red carpet, think again. Vietnam, Thailand, Malaysia, and Indonesia already have long-standing trade agreements with China, Japan, South Korea, and the EU. Canada stepping in doesn't guarantee smooth sailing, it means competition. ASEAN nations aren't looking for a backup partner. They want trade that benefits them. So, what does Canada bring to the table? Resources. Canada is a key supplier of metals, minerals, and energy. Tech and innovation. ASEAN is seeking stronger digital infrastructure, and Canada has expertise in this area. Green energy partnerships. Several ASEAN nations are pushing for renewables, and Canada has the investment power to support them. But here's the challenge. Canada needs these deals more than ASEAN does. The real test is whether Canada can secure long-term partnerships before ASEAN's biggest trading partners lock in the best deals. Otherwise, this could be an uphill battle with no guaranteed success. At first glance, this may seem like a simple Canada-ASEAN trade shift. But zoom out, and it's part of a much bigger story. The global race for trade dominance. Here's what's happening in real time. The US is solidifying its trade sphere with tariffs and stricter terms. China is strengthening its ASEAN ties, conducting nearly $1 trillion in trade annually. The EU is negotiating stronger economic deals across Asia, and now, Canada is entering a trade war where the biggest players have been positioning themselves for years. Why does this matter? If Canada successfully integrates into ASEAN trade, it becomes a global trade powerhouse, not just a US partner. But if these deals fall through, Canada risks losing leverage in both ASEAN and North America. Meanwhile, Washington is watching. If Canada proves that reducing dependence on the US works, other countries might follow suit. This isn't just about Canada's success. It's about whether this move sparks a global shift in trade power. Making trade deals is one thing. Actually moving products across the world is another. And right now, Canada's biggest challenge is just beginning.